Hello, ladies and gentlemen. Good morning to you, and I welcome you to another promising session as we look at the XAUUSD together and see if we could identify any trading opportunities that we can actually take advantage of during this week. Obviously, this is a follow up detail to my previous analysis on the gold. And I always like us to have a quick review of what really happened during the course of last week so that we can have an idea of where we were coming from in anticipation of the new week. So, talking about follow ups on this chat, I want us to quickly run through what really happened during the course of last week's trading session. So the week on the XAUUSD started on a bullish note initially as we were able to capture a market structure at the beginning of the week, just right within the 1895 and the 1869 level. And you all know what we look out for whenever we have this kind of channel. We want to see price action do some breakout of the structure to give us a trading opportunity. So with a sell stop order at the support line at the 1869 and a buy order at the resistance line at the 1895, we saw how price action broke out of the resistance line to trigger our buy position. And at this point, we rode the move all the way up. I told us all to secure positions here as we anticipate a breakout of the 1913 to add more position to our existing trade. However, what happened here was quite interesting as we saw that till the following day, sellers continued to reject all attempt by the buyers to break out of that level. And as a result of this, we continue to see selling pressure right around the 1915, negating any further attempt by the buyers to break out of that level. This continued into the New York session on that day, and as a result of this continued selling pressure here, we thought that price action would actually go through a bearish momentum, so we positioned ourselves right below the 1904 in anticipation of a reversal pattern on this market structure. And we had our sell stop order triggered here, and price action spent about 24 hours at the loss zone before we saw price continue to the downside. And in fact, the third day price moved about over 1,000 pips in profit, breaking out structures at the 1,895, which also triggered additional position to our existing trade. Then what happened afterward was quite interesting here as we saw price action take us out of all our sell position with a small profit, breaking out of that bearish trend line to give us a signal that we might be going bullish. Though we were not able to take advantage of the breakout of structure as we were thinking this could turn out to be false breakout, but with the buy stop order we had at the $1,915 level, as you can see, we had price action, we had a position triggered at that point, and we continued to ride the move all the way up. And we also had another position at the breakout of the 1930. Then what happened here? We saw price action drop back into the 1915 level, a level which was our resistance point at one point. And then at this area, I identified the simple setup here where I was initially thinking it's going to be a sell momentum. But with the rejection of the 1915 here, I told us all to have a buy stop order above the 1915. And from this point on, okay, I think the following morning we identified the simple setup too as well, where we were at an equilibrium where anything could actually happen. A break above of the 1915 and the bearish trend line will welcome buy position, and a breakdown to the downside of the bearish trend line will welcome selling opportunities. And what we saw here was saw buying pressure resume, price action breakout of the 1920, trigger the buy position, breakout of 1924, and we continue to ride the move all the way up to the upside here. If you do want to have a look into how we took advantage of this trading opportunity last week, I will be dropping the link to this commentary in the comment section of this video. And if you are watching this from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen right now. With that being said, here, let's dive into the current market structure. And I will be diving straight into what has been happening in this market since the beginning of this year. And if you look at the structure here, this is where we were since the beginning of the year. And for those who would like to see what happened before this current structure, you might want to see my previous videos for better understanding of what is really going on here. I will be dropping the link at the top right hand side of your screen if you are watching on my from my YouTube channel. So the new year 2023 started with a bullish momentum here as we saw price action did a final breakout of the structure around the 1820 1800 area, and we saw this bullish momentum where price action moved about a thousand, I think 14 15,000 pips as it got into the 1960 level. We saw selling pressure resume, bringing a new crash as price action came back into the zone where it started the new year. So this is where price action started the new year. We saw price action come back into that structure. We saw buy pressure resume around that area where price action transitioned into a reversal pattern in the form of a double bottom structure. As you can see here, price was unable to break the previous low, giving us a beautiful setup in anticipation of a bullish momentum where the $1,860 level um, happens to be the neckline of that reversal pattern. And during the course of last couple of weeks here, we have seen how price action has continued to find higher highs. And prior to last week trading session, we were around this area at the 1900, a very significant structure, if you would ask me, based on this current market structure. And the breakout retest of the 1900 further emphasized the strength of the set of the buyers in this market. Now, this had led to the breakout of the 1960, which happens to have broken out of the previous highest point price action has ever been this year. As you can see here, we had an engulfing bullish candle springing out of that structure to further emphasize the strength of the buyers in this market. Now, with the situation of things right now, will this bullish momentum continue to the upside when we start the new week, or are we going to be having a situation where some retracement phase could actually happen where price could retrace back into the trend line or the 1960 level, or probably break down the 1960, retrace back into the bearish trend line or the zone between the 1900 and the 1860 level in anticipation of another wave of bullish momentum. So this is one of the perspective we are going to be looking at when we scale down to a much more lower time frame. Then another thing that could happen here, considering the fact that we have a list of fundamentals to look forward to this week, as we could see price action go through um, a consolidation phase or a choppy situation around this area before price action breaks out of structure to incite a trend continuation to the upside. So these are the things we are going to be looking at too. Then there is this structure here at the $2,000 level, which I would like us to see to as well before we go into the details on the lower time frame. Now, if you look at the structure here, you can see the 2000 level mark was exactly a year ago when price action got to that point. And with the situation of things right now, with a stronger engulfing candle leading into that structure, we might likely see a breakout of that level during the week. But we can't tell for now. But one thing we want to be doing right now is to understand what is really going on around here in order to make a decision for the week. So before we scale down into a much lower time frame, let's run through the fundamental perspective of this market. So I want us to quickly look through the economic calendar here, where there are a series of macroeconomic events to look forward to this week, which shall be bringing liquidity into this market. Obviously, you all know that despite our technical understanding of the chart, we need some catalyst that will drive price movement in whatever direction it's going so that we can position ourselves in such a way that we can catch that move. And if we look at the economic calendar here, we shall be focusing on events that will be affecting the US dollar. Now, the first macroeconomic event comes up on Wednesday. So we might likely see some choppy situation prior to that Wednesday's trading session. So it might be a little bit slow during the beginning of the week before we start seeing traction or price action gaining momentum on that day of the event. So on this day, we have the Fed interest rate decision, as we have all been anticipating this event for over a week now. So we are going to be looking forward to this event. We also have the monetary policy statement. We have the FOMC economic projection, interest rate projection, and then we have the FOMC press conference on that same day. Then the next event is coming up on Friday, March 24th, and we have the durable goods order and the non-defense capital goods orders too as well. So these are high impact events we are going to be looking forward to, and we shall definitely be seeing the reflection of this anticipation on the chart as price action. So let's dive into the lower time frame so that we can look at things from a technical standpoint in order to be able to position ourselves in such a way that we can catch this potential trading opportunity. So going right back into the 4 hours time frame right now, was I able to see here? And I think this is what we shall be using to guide our trading activity for this week. Now, look at the structure here on the 4 hours time frame. You can see that throughout the month of February, stroke the first week of the month of March, price action has been bearish. So the month of February started at around the 1960 level. And to further emphasize the strength of the sellers in this particular market, we had this descending channel here. Now, during the course of last week's trading session, in fact, at the beginning of last week's trading session, we saw the breakout of the resistant line of that descending channel to further buttress the strength of the buyers in this particular market. And since the breakout of the structure happened, price action has continued to find higher highs in this market. Now we have a situation right now where price has broken out of the 1960, hereby approaching the $2,000 level. And I told you on the daily time frame how the $2,000 level also, the last time price was there was in the month of April last year, and we saw how a sharp rejection of that level incited a sell momentum from that area. So we need to be very, very careful around this area as we approach that $2,000 structure, as we want to see how price action will be reacting to that level to decide how we want to be taking advantage of any trading opportunity from this level. Now, as we head into the new week, well, for me at this point, I want to see how price action will be reacting to the current structure here to decide what our next line of action will be. So, one of the structures we shall be looking forward to might likely be price action retracing back into the 1960. You all know from a technical standpoint, whenever we have a breakout of structure, there is a likelihood that price action may come back to do a retest of structure in anticipation of another wave of bullish momentum. So that is one scenario, that is one expectation we should be looking at on this chart. Then another thing that we should look at here is you can see that after breaking out of the resistant line of that descending channel here, price is yet to come back and retest that structure. And there is also a tendency, if we start seeing selling pressure resume at the beginning of the week, breaking down the 1960, we might see price action drop back into the resistant line of that descending channel on the 1860 level in anticipation of another wave of bullish momentum. But if selling pressure did not begin and the week started on a strong bullish note, we might likely see a trend continuation pattern from this area from our lower time frame to join a trend continuation to the upside. So these are the things we shall be looking at the beginning of the week. But be rest assured that I will be jumping in the comment section of this video to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the XAUUSD for this week. And if it did, why not support this project by clicking the like button? Don't forget to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section as usual as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.